Imagine waking up tomorrow to discover that China has quietly pulled the plug on America's most powerful tech leverage, not by force, not in war, but through a regulatory stroke that could reshape the very backbone of the global AI race. That's not fiction. It's what's happening right now. Just days after Xi Jinping's high-profile meeting with Donald Trump in South Korea, China issued a sweeping directive. All state-funded data centers must stop using foreign AI chips. Think about that. Data centers, the workhorses of modern AI, can no longer run on US-made semiconductors like those from Nvidia, AMD, or Intel. If you follow tech and geopolitics, you know why this is a big deal. But if you're new to this, let me walk you through how this move could fundamentally change the balance of power, and why America's chip dominance might be under real threat. First, let's break down what exactly China has done. According to Reuters, China's regulators have told new data center projects that have received state funding to use only domestically made AI chips for facilities that are less than 30% complete. Yes, even half-built ones. They've ordered the removal of foreign chips or canceled plans to procure them. More mature data center projects are being assessed on a case-by-case basis. The chips targeted here are not basic CPUs. These are AI accelerators, the high-performance GPUs and neural processors that train and run large-scale machine learning models. And the names getting pushed out? Big ones, Nvidia's H-series chips like the H20. This is a direct hit to Western firms. Reports suggest this isn't a small symbolic policy. As per Bloomberg, China seems to be aggressively reallocating its AI compute budget toward homegrown alternatives, placing state-backed data centers under tight guidance to adopt domestic AI chips. Why now? Because this is central to Beijing's vision of algorithmic sovereignty. In simple terms, China wants to fully control its AI infrastructure by relying only on its own processors and software. It's not just a tech play, it's a national security play. It's about economic resilience. And make no mistake, they're racing to make this happen by 2027. Now you might wonder, does China even have the domestic capability to pull this off? After all, Nvidia didn't become a global powerhouse overnight. The answer is yes, they are surprisingly ready. Chinese companies like Huawei, Cambricon, More Threads, MetaX, and Inflame are not small fry. These firms already produce AI chips that, while not as powerful as the top-tier Nvidia GPUs, are improving fast. And with a guarantee of government-backed demand, their market is now ballooning. Huawei in particular is a major beneficiary. Its Ascend line of AI chips is increasingly being deployed in state projects. And now, with this policy, the pathway to dominance is clearer than ever. At the same time, this isn't just about cutting off foreign chips, it's about shaping the future of AI development inside China. If government data centers standardize on Chinese hardware, it encourages software and model developers to optimize for that infrastructure over time. That could create a self-reinforcing ecosystem: domestic chips, domestic AI frameworks, domestic models. Let me pause here and pose a question to you, the viewer. If access to top-tier American chips is shut off in state-backed systems, how much of global AI innovation can realistically stay tethered to the US ecosystem? Because what we are seeing now may be the early stages of a bifurcation, a split in the AI world. But before we jump ahead, there's a deeper layer to this story: the long game. It's not just about chips, it's about raw materials, the very elements that make chips possible. China doesn't only control microprocessors, it also dominates rare earth elements. These are the minerals critical to making high-performance magnets and various advanced technologies. In fact, China refines about 85 to 90% of the world's rare earths. That means even if the US were to build out its own semiconductor fabs, which many are, it would still be exposed to Chinese leverage through the supply chain. America is still deeply dependent, not just on chips, but on the materials underneath them. Pause for a breath. So, putting it all together, China has just announced a ban on foreign AI chips in its most strategic infrastructure. It's backing domestic players. It's controlling its own compute backbone, and simultaneously, it retains dominance in the rare earth supply chain. All of this raises a crucial point. America's tech leverage is under threat not just at the hardware level, but deep in the very raw inputs of technology. So, what happens when one of the world's largest AI markets suddenly closes its doors to your chips? For U.S. companies like Nvidia, AMD, and Intel, the implications are immediate and stark. China isn't just a large customer. It's the market that has fueled decades of growth in semiconductors and AI accelerators. Losing guaranteed access to state-backed projects could shave billions off revenue projections, tighten margins, and force a strategic rethink. But the story isn't only about lost sales. There's a larger systemic effect at play. By mandating domestic AI chips, China is accelerating what economists call a technological bifurcation. Imagine the world splitting into two parallel tech ecosystems, one tethered to American hardware and standards, the other developing its own chips, frameworks, and AI models entirely within Chinese borders. Over time, this could reduce interoperability, fragment supply chains, and redefine who sets the rules for AI innovation. Huawei's rise is central to this story. Over the past decade, the company has quietly built a formidable AI chip ecosystem. Its Ascend series is now powering some of China's most advanced government and commercial data centers. With Beijing's policy push, Huawei is positioned to become the uncontested leader in Chinese AI hardware. The guaranteed domestic demand is like throwing rocket fuel on a launch pad. Growth that could have taken years is now being compressed into months. Other domestic players like Cambricon and More Threads are also set to benefit. Government procurement guarantees a stable revenue base, which in turn funds R&D. This isn't a short-term subsidy. It's a strategic lever to achieve algorithmic sovereignty. By 2027, China aims to have end-to-end control of its AI infrastructure, from chip to cloud to algorithm. And with such scale, their chips and frameworks could start attracting international attention, even outside state-funded projects. Now let's shift focus for a moment. The United States. The irony here is unavoidable. While America has long held the upper hand in semiconductor design, it remains deeply dependent on China for critical materials and manufacturing. Even if U.S. companies scale up domestic chip production through initiatives like the CHIPS Act, it would take years to fully replace the supply of rare earth elements and other inputs that China dominates. In other words, America can cut off exports to China with relative speed, but China can control much of the critical supply chain in return. This creates a high-stakes asymmetry. The U.S. is fighting for influence in the semiconductor market, while China leverages control over raw materials, talent, and state-backed infrastructure, and it doesn't stop there. Analysts suggest that China's push for domestic AI chips could encourage a wave of software and algorithm localization. Artificial intelligence models optimized for Chinese hardware could diverge significantly from models running on American GPUs. For global AI developers, this introduces compatibility challenges and slows cross-border innovation. Essentially, the world could see two AI standards emerge, each optimized for its own ecosystem. Consider this analogy. The U.S. once controlled the shipping lanes of global trade. That dominance allowed it to enforce rules, standards, and pricing. China, by contrast, is building its own highways for AI, highways that bypass U.S. infrastructure entirely. And with those highways, Beijing can accelerate domestic innovation while keeping foreign influence at arm's length. What about innovation outside China? Will the world suffer a slowdown in AI breakthroughs? Not necessarily. Private sector AI projects in the US and Europe will continue, but they may face higher costs and slower scaling without Chinese collaboration. Conversely, China's ecosystem could see faster domestic adoption and larger state-backed experiments. This dual-track scenario may redefine who leads in AI over the next decade. Meanwhile, Wall Street is already taking notice. Nvidia's stock, which has been a bellwether for AI optimism, saw volatility as investors weighed the impact of lost Chinese demand. And beyond public markets, the broader geopolitical stakes are immense. Technology and national security are now inseparable. Every chip, every data center, every AI algorithm is part of a strategic chessboard. At this point, it's clear that Beijing's move isn't just about banning foreign chips. It's about reshaping the rules of global technological competition. The world is entering an era where who controls AI infrastructure may determine economic and strategic influence for decades. So, what does all this mean for the United States, for global tech companies, and for the future of AI? The short answer: the game has changed. China's decision to ban foreign AI chips from state-funded data centers is more than a policy shift. It's a declaration that the global tech playing field is being rewritten. For U.S. companies, the immediate challenge is clear. Losing access to Chinese state-backed projects cuts off a significant revenue stream. But the bigger challenge is strategic. The U.S. now faces the prospect of a world where its hardware and standards are no longer the default Nvidia, AMD, Intel. They are not just competing in a market anymore. They're competing with a parallel ecosystem backed by a powerful government with long-term planning and deep pockets. Investors should take note. This isn't a temporary disruption. It's the beginning of a structural shift. Companies that rely heavily on China for sales, supply chains, or data may need to rethink strategies. Those with diversified global markets and strong domestic support could fare better. And for those betting on AI supremacy, the story is now one of dual innovation tracks, a US-led AI ecosystem and a China-led one, each with its own infrastructure, hardware, and software standards. For global innovation, the consequences are mixed. On one hand, competition could spur breakthroughs. On the other, fragmentation slows collaboration. Researchers and developers may face higher barriers to interoperability. Models trained in one ecosystem might not easily transfer to the other. It's a world where a company's choice of hardware could dictate who they can collaborate with, what software they can run, and even which markets they can access. From a geopolitical standpoint, China's move underscores the limits of U.S. tech leverage. The tables have turned. Washington can impose export controls, but Beijing can rapidly internalize its AI capabilities and leverage its dominance in rare earths. The balance of power in technology is no longer just about innovation. It's about supply chains, state planning, and strategic autonomy. China's path toward algorithmic sovereignty is ambitious, but it's also calculated. By guaranteeing domestic demand for AI chips, they ensure their tech ecosystem grows robustly, fast. By controlling the underlying infrastructure, they protect themselves against external shocks. And by combining this with dominance in raw materials, they create leverage that the U.S. cannot easily counter. So, where does that leave the U.S.? Policymakers and companies alike face a stark choice: double down on domestic chip production and supply chain independence, or risk losing influence in the fastest-growing sector of the global economy. Programs like the CHIPS Act are a start, but rebuilding dominance takes years. Meanwhile, China is moving at full speed. For the average investor or tech enthusiast, the takeaway is clear. The global AI race is no longer just about who writes the smartest algorithms or builds the fastest GPUs. It's about control of hardware, software, talent, and resources. And right now, China has made a bold move to seize that control. In practical terms, this could mean several trends in the coming years: a surge in Chinese AI startups thriving on domestic hardware, U.S. companies seeking alternative markets, increased government investment in homegrown chips in the West, and ultimately, a world where two AI ecosystems operate in parallel, with limited overlap. We are witnessing a pivotal moment in technological history. The consequences of today's decisions, both in Beijing and Washington, will shape the innovation landscape for the next decade. One thing is certain: the era of unquestioned U.S. tech dominance is being challenged in ways few anticipated. If you found this analysis insightful, don't forget to like the video, Comment your thoughts on which country will lead AI in the next decade, and subscribe for more in-depth financial and tech breakdowns. The global tech chessboard is shifting fast, and staying informed is your best strategy. Stay tuned for more videos where we break down the world's biggest economic and technological moves, because understanding these shifts isn't just interesting, it's essential for navigating the future.